Polymarket, Bitcoin, up or down prediction markets can be very easy, especially if you know what you are doing. In today's episode, I will be breaking down to you the patterns, the specific patterns that give you a better chance, a better edge, especially when it comes to finding these unicorn bets. So you guys already now are familiar with the term unicorn bets. So basically, these are bets that give you very, very high rewards due to the fact that they've got low probability that is actual probability, and everybody is betting against them. So this is one of the reasons why you are able to literally make a 10x, because you are able to identify such type of bets. Okay, so in today's episode, we're basically going to be talking about the technical analysis of how to identify such type of trades. I introduce you to bearish divergences, bullish and bearish divergences. These are going to help you identify areas in the market that really do not seem apparent, and a lot of people do not get to appreciate them. And this is one of the reasons why you are able to pinpoint reversals. What if I told you that there is a way to accurately predict on Polymarket if the price of Bitcoin is going to go up or down? It doesn't really matter whether you are trading the 15-minute, the 1 hour, the 4 hourly, or even the daily time frame. Our group contains information which is going to be relevant to you if you want to sort of, accurately trade. And when it comes to market contracts, we obviously share the best entry levels. We give you technical analysis. We use sophisticated arbitrage bots and also AI in order for us to make sure that our accuracy as far as these prediction markets are concerned are always top notch. Feel free to join us right now. The link is going to be in the description. So now, what I want you to memorize and revise is when it comes to prediction markets, especially cryptocurrency related prediction markets, you are not day trading. You are not a day trader. Repeat after me. Prediction markets, especially when it comes to Bitcoin up or down, or cryptocurrency prediction markets, rely basically on edges and technical analysis and just basically understanding the core operations of what really makes markets move. So if you are in the habit of trying to make a trade each and every day, if you're not using sophisticated trading bots, you're going to end up losing 99% of the time. So what I'm about to show you is it's going to allow you to identify reversals. So in order for you to simplify the idea of when you're supposed to be participating in prediction markets, think of it as a U-turn or a turnaround moment, especially when the price has been moving in a specific direction. So now imagine the price of Bitcoin has been consistently producing lower lows and higher lows, which is technically speaking a downtrend. So when the price is producing lower lows, okay, this low is lower than that one, that is technically a downtrend. So what you are specifically looking for if you are in the business of prediction markets is that particular moment where the price is going to divert and sort of have a different trajectory and just basically go against the norm. So this particular area is what you are looking for, that specific turnaround as far as the dominant trend is concerned. The reason this is very important is because this is where you are going to find your unicorn bets. These are bets that are going to give you a 10x. And these types of market conditions do not always appear. And this is one of the reasons why I'm saying, if you see that a trend has already happened, the chances are on the prediction markets, there's going to be unfavorable odds for you, because it's all about timing. Prediction markets is about identifying the value of each share, properly evaluating each share, and just basically having the proper timing. So the first piece of the equation, in order for you to pick out and identify a very favorable odd for you in the prediction market game, is anticipating a reversal especially against a dominant trend. If you are able to identify that a reversal is bound to happen, you are therefore going to be likely to pick a unicorn trade, and you're most likely going to make a 10x. So I repeat, prediction markets, especially when it comes to cryptocurrency, is not a daily endeavor. Be strategic with your entries. And this is one of the reasons why, in order for you to highlight these reversal points in a market, you have to use specific indicators. These indicators are known as the oscillators, or indicators that really signifies bullishness or bearishness and the strength of the buys and the sells, etc. And a lot of them you guys are quite familiar with. RSI, which is the relative strength index. You've got the MACD, the moving average, convergence, divergence indicator, the stochastic oscillators, and so on and so forth. So in order for us to simplify this particular strategy, we're just going to be using an RSI, which is a relative strength index. If you go to my Telegram, or rather my trading view, simply look for the RSI indicator. These are the settings that I have in case you guys are a little bit curious. This is what I have on my settings, my inputs. I'm using the 14-day average. The source is obviously closed, so we're using a simple moving average with an average length of about 14 days, or rather 14 candles. So every 14 candles it recycles back, and the BB dev is around 2, and this is the color schematic that I have. Okay, boom, you've set up your RSI, right? So what you need to look for first of all is price action. By price action, I'm talking about the aesthetics of the general trend without you using even any indicator. And this is one of the reasons why I really recommend you guys to switch from regular candlestick patterns to Heikin-Ashi candles, because Heikin-Ashi candles can from a visual perspective give you a basic understanding of what is happening. So what you're looking for are moments of prolonged strong trend. Like for example, this one was a prolonged strong trend, right? So at this particular level, right, if you were waiting for a unicorn trade, you would have projected reversals like that one as well, and then you guys could have made very good amounts of money. So whenever we have a very prominent trend, right, there's gonna be about 3, 4, 5, on average about 3 divergences, or rather 3 unicorn bets that you can siphon out of that particular trend. And this is one of the reasons why I really want to drill into your heads when to have the instinct to go about prediction markets, especially when it comes to cryptocurrency, because 9 times out of 10 prediction markets are going to destroy your capital way much more than futures and even leverage trading, because if you are wrong, you get 0. If you're right, you get 100%. You understand? So it's like a winner takes all type of environment. So you have to be very meticulous, you have to be very careful, and you have to prepare, if that is even a term that I can use. Okay, so in this particular instance, right, you guys are going to read about bullish and bearish divergences, because bullish and bearish divergences have a sort of pattern. So now imagine this is price action right over here, right? Price action. So price action might be having a downtrend, right? If you're having a downtrend like that, right, you would expect your oscillator or your RSI, which is a relative strength index, to sort of also produce that type of pattern as well. So if you go to your indicator, it is definitely going to be going down as well. It's going to be traveling from around 100 all the way to about 0. That coincides. So basically, a bullish divergence is a situation, or rather a scenario, where you have the price going down. Okay, so we're talking about a bullish divergence right over here. A bullish divergence is a scenario where the price is going lower and just basically wicking all up and down, right? while the relative strength index is diverting from the price, like it's creating a different pattern. It's showing strength in comparison to the price. Okay, so if the price is going down like that, then the relative strength index is going up. And if you have instances where, for example, the price does that, the RSI sort of prints a low and then it starts diverting. If you have such an instance, right, where the price is going down while the relative strength index is becoming more powerful, that right over there is a bullish divergence. Okay, while the inverse of such is you have the price producing a higher high, this is a price, while the relative strength index is becoming weaker. So that right over there is a bearish divergence. So this is a very simple concept for you to get. I would really advise you guys to just read on this, spend an hour or two, look at different examples and so on and so forth. So you've got a positive divergence, you've got a negative divergence, which are self-explanatory. So the reason why I really wanted to explain that fact is due to the fact that in instances where you have such types of moments, you end up receiving very good odds due to the fact that everybody is betting towards, the most apparent scenario, the most obvious probability, and the market's reverse and you get to end up making a whole lot of money. So let me give you a practical example. So we're going to rely on the 24-minute time frame, and moreover, these divergences happen on different time frames. You can have a divergence on the 24-hour time frame, you can have a divergence on the daily time frame, on a weekly time frame, on a monthly time frame. The higher the time frame that you're seeing, right, the more stronger and probable it is going to be. However, divergences on smaller time frames have got a very short lifespan. Okay, you can see a divergence, then it just reverses, and then in the next 4 hours the dominant trend proceeds and it continues going in its usual direction. So you have to always have a concept of understanding how impactful certain signals are and how long they are expected to last, if that makes any sense. Okay, so now let me show you a very practical example. So on the 22nd of December, right, we had a very strong downtrend. Okay, right over here we saw the price of Bitcoin peak at 90,222, and then it just kept on dropping. Like it dropped, boom, 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 and it was just dropping. So right over here, something interesting happened. While the price was creating lower lows, right, and ranging, something was happening on the RSI. I don't really know whether you guys are able to see this on your screens, but bear with me. Okay, so if you take a look at this, let me even use vertical lines so that you can understand the points in the market that I'm talking about. So you've got that particular point, and you also have another point. Now, another vertical line, I would say up to that level. Okay, so we've got this particular range. The price is going down, but take a look at the RSI. Okay, and specifically, I want to draw your attention to this level right over here. Here, do you see that? All of a sudden, the relative strength index diverted from the action of the price. Here, the price was still making lower lows, but how come the price was making the relative strength index was making a high? This right over here was a divergence, a bullish divergence. So once you get to see a bullish divergence, right, it's just a matter of time till the price reverses. If you were in this trade, right, you would have obviously had better odds. Everybody was betting towards the downward continuation, and I can guarantee you that the up or down shares, or rather in this specific instance, the up shares around these levels were ridiculously, underpriced. So if you are able to spot such activities in the markets, then you're good to go. So if you put and especially after this particular downward trend right over here, Okay, if you put in a bet right over here, betting towards a reversal, I can guarantee you would have done a 10x easily. And this is the beauty of prediction markets. Prediction markets trading is a very different beast, if I can put it that way. It's not really your conventional traditional trading, because you have to reverse engineer how everybody else thinks. You understand? So without giving you analysis paralysis, I would really recommend you to like look up divergences and understand them, and then just basically incorporate them into your daily, or rather your bi-weekly trades, and just basically identify market scenarios that really give you very good odds. And the goodness about divergences, or rather highlighting these unicorn moments in a trading session, is even if you are absent and not participating in any trades, okay, you could avoid a lot of trades. But once you get a unicorn trade right, you instantly make a 10x. So instead of you trading prediction markets on a daily basis, be able to identify unicorn bets that you can give a shot. And if you execute diligently, you instantly make up for all the previous times you did not participate in the markets. I have definitely been a blessing in your life. I really hope that you guys, appreciate such type of information, because nobody's doing it like I am. Remember, I've had over a decade of experience, and it is all documented. Just go to my YouTube channel, just look up the earliest videos on my channel, and then you can see that obviously I know what I'm talking about. So yeah, that's all I had for you. If you guys think this was very well explained, if I opened your eyes to different concepts, please subscribe to my YouTube channel, and join us in our private trading group where we seek unicorn bets. We might not send out signals on a daily basis, because we understand the concept of precision and getting unicorn bets. So just be patient with us. But when that time comes, when we post a signal, best believe everybody's going to be smiling to the bank. So yeah, that's all I had for you. It's been your boy Muna, aka Muna. That is how you pronounce and spell it. I will see you tomorrow.